Hey everybody, Sean Bukowski here. Hope you all had a great 4th of July. It's one of my favorite it is my favorite holiday, not one of. And so hope you all enjoyed it as much as I did. I want to talk a little bit about this week about 1031 exchanges. I had a really interesting question come up from a friend of mine, and so I'll get into that a little bit at the end about what her question was. But I thought it would make a sort of interesting topic here. In general, 1031 you probably know, but under the IRS code, you can make a like kind exchange, and real estate is considered a like kind exchange, regardless of what specific types of investment real estate. You can so you can do a like kind exchange and defer the capital gains tax. So you can, if you purchase a house in 2000 and you want to sell it in 2010, as long as you do a 1031 exchange in 2010 and buy another piece of real estate, you can defer the capital gains on that and reinvest that money instead of paying it out in taxes. Now there are lots of sort of restrictions on this. You need to use a 1031 intermediary for it. There's some pretty strict time restrictions on how quickly you have to flip it, and then obviously what type of real estate can be used. Specifically, investment properties are only required. But assuming you could follow those issues and those rules, it's really a extremely useful tool for investors to be able to defer those capital gains and keep investing into bigger and better real estate. Now, what a friend of mine was asking, which was super fascinating, was she wanted to know, she has an investment property in a foreign country and wanted to know if she could use that as a 1031 exchange, and it was not something that we had come across very often. So did a little research, and it turns out that the IRS basically considers like kind property to be in the same country. So I don't think she can sell a property in a foreign country, buy some real estate in the U.S., and use that as a deferment of capital gains. Now, if she, if it's a U.S. based entity or that owns this, and she's buying property or selling property in Costa Rica and buying other property in Costa Rica, then I think that entity in the U.S. could defer those to capital gains. At least that's my understanding from reading some issues about it on the internet. So that's just a little, I thought that was interesting, a little tidbit about how 1031 exchanges work. We are not tax lawyers. We're not a CPA. So if you have specific questions, please talk to one of those. And if you don't know one, give us a call, and we will certainly help find you a great one, because we know a bunch. Hope you enjoy your week, and please subscribe to our podcast, our YouTube channel, and our blog. Thanks.